Now we head back to our conversation on the Monetary Policy Committee meeting that is slated for next week. Joining me now is Management Consultant and Investment Advisor, Fife Banks. Fife, welcome to News Central Now. Thank you for joining me.
Thank you so much for having me. Good afternoon.
Good afternoon. Let's quickly look at this. Now, how do the changes in interest rates, whether rising or falling, directly affect the returns on fixed income investments such as government bonds or treasury bills in Nigeria, especially knowing how oversubscribed we saw Nigerian government bonds just last week?
Apparently, the oversubscription came from investors' positive outlook, on the kind of returns they will get on the government securities, because there is actually a positive correlation between rising interest rate and the returns that you have on fixed income instruments. Simply put, the higher the interest rate, the higher the returns on government securities will be. And when interest rate falls, the return on government securities, on bond, on treasury bills would also fall, leading to a reduction in demand for such securities. So people begin to look for alternative investment that have, higher returns, and, they can go back to equity, and maybe even venture capital, for startups and what have you. But, there is always positive correlation.
All right, you've gotten partially into my next question, which is also looking at sort of the key risk and the opportunities for investors in Nigeria when we see these interest rates rises, especially for sectors like real estate, manufacturing, and financial services. So just quickly take us through the risk and even more of the opportunities as they may be.
Fantastic. So the risk, cuts across all sectors, not even singling out those, three sectors you've mentioned: real estate, financial services, and manufacturing. The risk would include reinvestment risks, for instance, which has to do with the investor not being able to get, cash flow to reinvest at the rate, at which they invested initially. All right. You also have default risk, because then you see that the investor is not able to get the money out from, for instance, government can default, right? Even if it's a corporation, the corporation can default due to us. So these are the major risks. However, there are opportunities. Like I mentioned earlier on, once interest rate rises, returns are expected to rise. So there is this expected higher returns on investment. And of course, people can diversify their portfolio, knowing fully well that interest rate affects pretty much every transaction. It has become a benchmark for all transactions. The interest that you get, the return on your investment is supposed to be higher. What happens is that people, would also want to, like I mentioned, diversify their portfolio, and you probably see some foreign investors, even coming in as a result of the fact that the interest rates are high now, return on investment are high now. So because, as you know, capital is always looking for where it can be best optimized.
Absolutely.
Right? So yes, that's one of the opportunities.
Okay, so in relation to that, I know foreign direct investment, Forex is a conversation we constantly have almost in every business sense. So when we look at these interest rate fluctuations, what influence or what bearing do they have on Nigeria's FDI, and what sectors might also be particularly impacted?
Yes, foreign investors, are watching, observing, and seeing what is happening in this space. For instance, like the oversubscription that you mentioned, will kind of incentivize them to want to begin to look keenly, at the opportunities in this economy. But bear in mind that there are other factors, affecting foreign direct investment, apart from just high interest rate or the expected, high return on investment. Sometimes is the risk appetite of the foreign investors. Sometimes it's the economy and the security of their investment. Sometimes it has to do with their preference. In Nigeria, typically over the years, and in fact what we see in the market, I've just returned from the US, looking for investment. And what we see is that most people are still interested in the Nigerian oil and gas sector, as opposed to other, sectors of the economy that are coming up. Yes, we expect foreign direct investment to impact still the oil and gas and energy sector, maybe a bit of steel, because Nigeria itself as a government, we are now, concentrating effort. In fact, recently, I believe that the ministry, recorded a win in terms of getting about $1.5 billion. Manufacturing will probably not get as much until our energy, is more stable. Of course, the financial services, they are the masters of the game. They will still be able to attract, investment. And the financial sector is doing very well. Interestingly, even as other sectors, are kind of struggling. So yes, you can look at, investment coming into those sectors, maybe a bit of real estate from Nigerians in diaspora,
all right,
who want to,
who want to invest at home. Yes.
Investment, exactly.
All right, Fife, before I let you go, very quickly, we saw that yesterday the Federal Reserve in the United States slashed interest rates by 0.5 point, which is an aggressive start to the first easing campaign that has been experienced in 4 years. And the Fed tends to lead the way. We've seen how other people and other central banks have seemingly followed suit. In just about 30 seconds, what do you think the trend might be or the impact of the Fed starting a slashing for the first time in 4 years? Just 30 seconds, please.
First of all, as the elections in the US are approaching, I want to think that this is not an election, strategy to be able to gather votes, for the government of the day. But then, if you look across the world, the economy is tight, across the world. So the US leading the way, as you know, is quite influential. We're going to see other nation states, following suit. And in Nigeria also, there's a meeting that the CBN wants to have on the monetary policy next week. I think we should also take a cue, from that, because if you go on the street, you realize that, the average citizens are really bearing the brunt, of the economy.
All right, and a little bit of a prophecy there. We'll see if it bears fruit and if the CBN's Monetary Policy Committee decides to follow what may be a trend or may just be an outliner in these dimes. Fife Banks, thank you so much for joining me.
Thank you very much.
All right.